Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Well, last week gold prices, they did edge up slightly higher, up 0.5% on the week, helped by a weaker dollar and of course all of the uncertainties over Brexit and also the US-China trade, helping gold to notch up a small weekly gain. Meanwhile, over the course of the weekend on Saturday, MPs voted to delay Brexit. However, the British government insisted on Sunday the country will leave the European Union on the 31st of October, despite a letter that Prime Minister Boris Johnson was forced to send to the bloc requesting a Brexit delay. The latest updates on Sunday have been that the EU is to grant a 3-month Brexit extension if Boris Johnson fails to get a deal through Commons next week. And at the moment, we are expecting slight gap downs on the open for certainly the pound, the euro, as we go into the Sunday open through to Monday as well. Meanwhile, oil prices, well, they did edge lower on Friday, but losses were limited on hopes for progress towards a US and China trade agreement. And of course, on Thursday, it will be goodbye for Mario Draghi, whose 8-year term as the ECB chief ends on the 31st of October, where he will be handing over to his successor, Christine Lagarde. Now, in the latest week, hedge funds and money managers, they have cut their net long positions in both COMEX gold and silver contracts in the latest week. So with that, we'll move over to the charts and we'll talk you through the key levels that we're looking at as we go into next week. Firstly, moving over to gold, this is gold on the weekly chart, and you will see we had quite a subdued week for gold last week. And again, we mentioned this in detail on Gold Asset of the Day, that essentially we weren't looking for really any big moves last week. We were building positions at the lower end of the ranges and just capitalizing on those short-term breakouts higher. We were not expecting any real big breakouts much beyond the 1500 zone last week. And in fact, we saw that several times last week. Gold price action, it came up and re-tapped just below 1500 at 1,498 US dollars per ounce, and the low last week was $1,476. So gold moving within roughly about a 220 point range last week, which was quite tight. However, you can see again on the higher time frames where ultimately we are starting to build into this potential bull flag. Now, whether we do break out of this bull flag going into next week, we may not do, because typically the third week of October can see again more consolidation, more range bound trade. We have the European Central Bank announcement on Thursday, and also what I would be looking out for would be the potential for gold to get a slight gap on the open from Sunday through to Monday, but just watch out around that 1500 level at the moment. We've tended to see pressure around that zone. We of course know that hedge funds and money managers, they have reduced their net long positions in the latest week. I am expecting further upside for gold over November and December, but at the moment you want to be really nimble with your gold trades. You want to take advantage of these ranges at the moment, and you want to avoid FOMOing in, buying too high, but you also want to avoid a lot of these bear traps that we've seen for gold, where traders are getting tricked into trying to sell short gold and it's just not breaking down. We continue to see it catch a bid, and you can see that again on the weekly chart, where we've got a lot of these high wicks on the weekly, where each time gold is really dipping lower, it is catching a bid, and it's never really closing the week limit down, so it's not closing right at the weekly lows, and that's something just to bear in mind at the moment for gold. If we go over to the daily chart, in fact, gold has been very clearly building a pennant over the last few days here. So if we have a look at the overall price action at the moment, you can see where we have been consolidating and coiling price, and really we're set to get a resolution on this in the coming days. But again, you want to be mindful, be quick to take profits off the table, or at least bank partial profits, protect your trades, especially if we were to get a gap up on the open. Just watch out for that. If we were to gap up towards the 1500 level, above that or just below that zone, we might start to see that gap get filled over the course of this week. So again, you want to be nimble with taking your profits off the table. And ultimately, if you have a look at gold and just bring it into the daily chart and look at where we're really sat at the moment, there's been opportunities really just to trade within this range. As I mentioned last week, we'll go through this in a lot more detail with you on Gold Asset of the Day next week as well. But really, you want to be very nimble in this market at the moment. Don't get FOMO and buy too high, and don't keep trying to sell short short right at the lower end of these ranges, because then you're going to get trapped in these sell shorts where you'll just get squeezed out of those positions. Now, moving over to silver, very similar in terms of the price action we've seen in the latest week. We've been stuck in a very tight consolidation here. We still maintain our position here from 16.98 on silver, so we're up around about 52 points on that trade. If we go over to the weekly chart here, you can see again consolidation on the weekly chart. We're coiling in price. We really want to see whether we can get a conclusive breakout going into next week. Now, the European Central Bank on Thursday, that press conference and announcement often does cause gold and silver prices to have some volatile moves, and of course you can benefit from that volatility in the market if that's going to be a catalyst for a larger move. And then going to the next week, we of course then have the FOMC statement on Wednesday the 30th of October, and also of course on the 31st of October potentially we have that deadline for Brexit as well, and we'll really see how things pan out over the next few days here. But I believe we will get a slight gap down on the open for the pound, for the euro, and we may get a gap higher on gold as well, and you really want to take advantage of those moves. I've had quite a few questions on platinum in the latest week, and answering this question, have we started to establish long positions on this market? The answer is yes. We've started to buy in at $885. In fact, we protected those trades. We've taken some profit off the table. If you go over to the weekly chart, you will see where we've been building a base on platinum. There's been a lot of support over the latest week here, whilst the price has been around that $880 per ounce handle, and you can see here again into the close, slight push higher. We tapped around $900, retraced a bit into the close. I would still definitely keep an eye on platinum. Typically from a seasonal point of view, it does perform well in the final 2 weeks of October, so definitely have platinum on your radar here. We've got our position that we've established, and we're looking for some more upside here as we go into next week. Just bear in mind that trade is also protected. Now, moving over to crude oil. So for those of you that watched Oil Asset of the Day last week, we explained this in detail, where essentially we were looking for range-bound trade again, opportunities to buy back in at the lower end of this zone. We bought in fact, we banked another 100 points on Friday on our position here with crude oil, and you can see a bit of a retracement here into the close, but overall on the weekly we're starting to build a base. We've got a high low, and again, just notice where there's a lot of high wicks on the weekly chart. You've got a lot of support so far in 2019. Each time we're coming back towards that 51 to 52 US dollar per barrel handle. We're never really closing limit down. We're always tending to find support here for oil. We are slowly but surely seeing a bit of a base form around that 51 to 52 US dollar per barrel handle. In the latest week, we did push up high, especially on Thursday. Again, you want to look out for geopolitical news in this market being a catalyst for sudden breakouts to the upside. Oil inventories on Wednesday, we did see an oversupply in the market, which initially did cause a sell-off. However, it didn't follow through. There's still some optimism regarding the US and China trade deal, which is providing some further support to oil prices as well. Of course, as we go into next week, we want to watch out for the API data, the oil inventories data on Wednesday as well. More narratives about the potential for US and China trade deal and talks, which are scheduled to take place later this month in October and through to November. Again, bear in mind we may get a bit of gaps on the open here as a result of some bearish sentiment coming out of Brexit over the course of the weekend. So it's possible that we could dip lower here on the open for oil, but if we do see that, especially if we were to come back towards that 52 to 53 US dollar per barrel level, that's where recently we tended to see a lot of support come into oil of late. And I'm looking again over the course of this week to take advantage of any pullbacks here back towards the lower end of these channels as potential buy opportunities, providing we do get buy evidence at the lower end of this range. So we've just continued to buy in each time that we've been dipping back towards the lower end of these ranges, which I've described in detail previously on Oil Asset of the Day and the week ahead reports as well, where essentially these have been great opportunities to buy back into oil each time we're coming back towards those magnetic levels of support. We've started to see things taper off with regard to hedge funds and money managers, their positions here. It's really started to stabilize, which is indicative of the potential for longs to start getting built around these areas. So the amount of net longs in the market right now is similar to the zones that we had going back to the support that we found back in June and July for oil, and again just going back to the support we found in June and February. The hedge fund positions, they're sitting at similar levels to where the price action was at that zone, where we then saw the price get well supported and springboard higher in the following weeks here, and typically between now and the end of the month in October. From a cycle point of view, especially the year before US election, oil does tend to get supported, but bear in mind again, it is quite a range bound market. You need to be quite nimble in taking your profits off the table each time we're getting a breakout back towards key levels of resistance, and then be willing just to buy back in again on these dips in price. So with that has been the week ahead commodity report. We'll be keenly watching the open today to see if we do get some gaps, as I've discussed, on gold, on oil, potentially a gap lower on the pound and the euro as well. And of course, if you would like to learn a research driven approach to the markets where you're focusing on a trading process which takes into account retail trading data versus the hedge funds and money managers, what the smart money is doing in the market, you're taking into account market sentiment, trade flow, cycles in the market, as well as seasonality, you're marrying that up with geopolitics, fundamentals, and you're also utilizing our in-house intelligence, that will all help you to generate a trade idea with edge in the market. So of course, if you would like to join a community of successful traders at the Gold and Silver Club, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, real-time trading research and market insights, access to our private Members Academy membership site, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will, of course, get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.